Good afternoon. Thanks for coming out. I'm Dave Fogel. I'm with Advanced Trading. We are based out of Bloomington, Illinois. I have been here before. We've been going to the show now about 15 years, and thanks Commodity Classic for having us and having me up here. I really appreciate it. I enjoy the show a lot. So a little bit about Advanced Trading, if you don't know who we are. I'm just going to give you a real quick little background here. We've been in business for 40 years. We started in 1979. 4 or 5 individuals from East Central Illinois, grain elevator operator guys, formed a company to try and give country elevators information. You got to remember, in 1979, no internet, no cell phones, no fax machines, I don't think, none of that stuff, so just phone calls. And then really from there, we just kind of grew. 1984, I came along. 83, 84 is when options were reintroduced to the Chicago Board of Trade. And the guys that started the group, the company, thought we could maybe venture into the farmer marketing space. So that's, to this day, that's who we are. You know, we've got about 110, 120 people. I don't know the exact number. We've probably got 30 individuals throughout the Midwest that'll talk to farmers direct, come out to your home, sit down at your kitchen table, talk to you, and they're just in various states. And then the rest of the group is in Illinois, Bloomington. So half the company spends their day talking to country grain elevators, warehouse people, ethanol plants, you know, feedlot type of stuff, anybody who's got basis or spread risk. And that's how they spend their day. And then the other half of the company is, you know, focused on the flat price part, helping farmers market grain. Drew Moore is in the back row, one of my partners, and Cat Sullivan. They're with Advance also, so Cat's the one waving. And so we've got the advantage to you guys in terms of our expertise on the cash side, because we're guys who come from the cash side for the most part. Having cash knowledge gives you 2 of the 3 pieces you have to be successful. You have to understand basis, you have to understand why grain moves or grain doesn't move, and you have to understand spreads. And I'll talk some more here in a little bit, but there's a lot of stuff going on, good and bad, probably more bad really, that has a lot to do right now with basis and spreads. Then the other half of the group, you know, it's our job to try and help you guys figure this stuff out, and that's really what we do, and so that's what I'm going to talk about here today. So we came up with 12 different steps, you know, to work on as far as being better marketing. One of the things I don't want to assume when I come up here, I don't want to assume you guys are all terrible marketers and, you know, you're here trying to find something better. I'm sure some of you guys are very good at it. But if I can help you with anything whatsoever in terms of something you hadn't thought about or a piece you haven't added to your operation, that's my job. You know, my job is to kind of give you guys some information maybe you don't have. I've done this for a long time. I've seen, I think, every mistake you can make. I've seen things go well for people too. Talked to a lot of people this week, and it's funny how everyone's somewhere different, you know, but there's a lot of commonality too. So our impression in Bloomington, we work with probably 800, 900, maybe 1,000 country grain elevators. So we have the luxury of seeing grain move or not. So it's pretty easy for us to tell whether you guys have sold 21, not sold 21, are you selling 22, not selling 22. And just kind of looking at numbers, you know, it looks like most people sold 21 crop for the most part. I would say the average customer that we see on our site, not our Advanced Trading farmer customers, just typical grain customers or elevators, I would say we're 90% sold on corn and beans for 21 crop. And we probably missed the market by $2 plus on corn and maybe 2 to 3 on soybeans. It's not an easy market to manage right now, right? But most people are behind. And as far as the 22 crop goes, very little done so far. And what has been done, it's, again, well below the market, but we've had ranges that, yeah, I've done this so long, but there are people trying to figure out how to compare this year to other years, and I don't think you can do that. I don't think there's anything you can look at to say this is like '08, this is like 12, this is like 95, 96, if you know what happened that year. It has pieces of all that stuff, you know. So we're coming off 2 years of an epidemic, the COVID thing, 2 years where things just got totally rocked for us. When it first started, you know, we lost a lot of demand type of things. We lost workers. We lost a lot of things then. And then just to kind of follow that up, we decided to have one of the biggest droughts we've ever seen in South America. and it really made a big difference in the size of their soybean crop, right? So that was that. And then, we were looking for something else to kind of talk about, so we decided to have a war in Europe. That was the last piece here. So now you've got three things that have never happened before together. I've never seen them. No one's ever seen them. And so now we're focused on, what's next. And so the Ukraine thing, I'm not going to get into the markets a lot because you'll see why in a minute. But the Ukraine thing is important. They raise a lot of corn. They raise a lot of wheat. And if they end up, they're going to try and plant. I know they are. But if they end up with not as much, acreage planted, not as much shipping as they hoped, it's a heck of a deal for all of us. What is it, 1.5 billion bushels of corn that the world would lose if they don't plant? That's a lot of grain. So next big things besides what happens in Europe is going to be March 31st, you're going to get an acreage report. And that was already a big deal before all this stuff happened in Europe because we're trying to figure out the corn bean acreage fight, right? And then after that, if we don't have a good spring and don't get in the fields well, or if we don't grow it well, it's going to be just crazy. And so we'll see. Hopefully we'll have a good crop. We need a good crop. We really do. And we'll see if we do, we don't. We don't control it. Nobody here controls whether or not we have it. So we'll go from there. 12 steps. So basically, one of the things I always talk about in different ways when I come to any meeting, including I probably have spoke here 10 times in the last 15 years, sometimes by myself. Tommy Grisafi, one of my partners, has been here and spoke. We did a panel a couple years ago with some of our brokers and research guys. So when I come up here, the hardest part of our job is to try and convince you folks there's nobody out there that knows what the market's going to do. And I'm going to tell you again today that's true, and you're going to go home and you're not going to believe me. You're going to start looking for someone that can tell you what the market's going to do. It's what you guys do. But raise your hand when you got the phone call back in August of 20 from your advisor, newsletter, whatever. Raise your hand and keep it up. Who got the phone call that says we're going to go up for a year and a half? Did you guys get that phone call? Year and a half rally. Right. So the same people that didn't know, including us, I wouldn't have told you it was going up then either. I didn't know. So the same people that could not tell you what the market was going to do in August of 20, we're now going to go to those same people and ask them what's going to happen here today. And they'll give you an answer. I know they will, but they're not going to be right very often. So in order to be good at marketing, and again, if you guys are doing great, please don't feel insulted, but in order to be good at marketing, it has to turn into a business. So on our country grain business, our elevator business, nobody calls us up and says, hey, I just bought 40,000 bushels for fall delivery from ABC Farmer. What should I do with it? You think it's going up or not? Should I hedge it? Should I not hedge it? They don't think like that. If you're a country elevator and there's basis left to appreciate in everyone's opinion, they go ahead and sell futures. And they're even. If the market goes down, futures gain, and then the cash they bought's worth less. If it goes up, the opposite happens. Loss in the futures and the cash is worth more. But they're even. They don't care if it goes up or down. So I hear often how, the elevators are probably happy. The market's dropping. They're getting grain cheaper. It's not how they operate. They don't care about the market going up or down. They care about whether or not the basis gets better after they buy it, which you should care about too. And they care about the spreads and what month they're in and moving them back and forth and that stuff. That's how they make a living. That's it. So if the elevators are just trying to merchandise a profit without gauging price, and the people that talk to country elevator people, the brokers, are really smart people. They're some of the smartest people in our business. But not one of them gets into the world of, hey, it's going up, it's going down. Those morning conversations are just, hey, freight's doing this, basis is doing that. Decatur traded a 20 over yesterday. It's those kind of things they talk about. But they never get into, hey, I was on the internet, and Joe says corn can't go down this year. No way, can't go down. Well, great. I'm not going to do anything then. So that's kind of how the world works on the elevator side. I don't see why you guys would do it different. So it's not hard. I don't know who's in this room. You probably got people that grow grain for a living. You got people that feed it for a living. If I go to a meeting with all growers, you guys want to hear me tell you about the 1.5 billion Ukraine's not going to grow, right? And then if you're feeding grain for a living, you want to hear me tell you that they're going to get that crop in They're going to plant it, and they're going to export it. Because you hear what you need to hear, right? We all hear what we need to hear. So as a grower, you guys will just turn off the news that's not, doesn't work to your cause, and it doesn't work. It just doesn't. So I really challenge you to, if you want information, we have 4 guys in our office that do research full time. I love reading all the stuff they do. It's really good stuff. I even read some other stuff. There's some really smart people on the internet. There's people on Twitter, if you're on Twitter. There's some, the Karen Brauns, the Arlen Sudermans. There's some really smart people out there, and they will educate you as to why price is where it is today. They will tell you everything you need to know. Brilliant stuff, but they're not going to tell you where the market's going to be tomorrow, or the day after tomorrow, or a week from tomorrow. So just start looking at the market from the standpoint, what is it that's going to make my family regretful we didn't sell grain today? And what is it will make my family regretful I did? So I don't know where this market's going, but for probably not every year I would say this, but it's literally a year where you can be wrong $2, $3, $4 either way. That doesn't happen very often. I know you guys are watching the markets. I mean, we had, 2 weeks ago, we had May beans in 24 hours trade up and down $1.87 range. $1.87. I mean, beans were $5 in 1986. You guys remember that? $1.87 from up to down, and you've seen the wheat market. I'm sure you're all watching the wheat market. That thing, if it's not up or down 30 cents when the market opens, it's like nothing's happening, right? But 30 cents is big, not to mention $1.50 moves. So here's what I do know. I will tell you this, my only price prediction I will give you. I know that the market will eventually crash. And it'll crash so much faster than it went up. So it went from August of 20 through now. We're up mid-March, right? That market just rallied for a year and a half. And I don't know if we're going to break tomorrow. Probably not tomorrow, Sunday, right? I don't know if we're going to break Monday, a week from Monday, or a year from Monday. But I promise you when it breaks, it won't take a year and a half. It'll be done in a week. It'll just be crazy. But I don't know what year it's going to be. I don't know if it's this year or not. I really don't. But it's easy. So no matter how crazy the market is, the marketing doesn't get harder. I don't think marketing is hard at all in this environment, any different than it was 2 years ago. And marketing used to be hard when you guys had droughts, but now it's not true if you have crop insurance. We don't sell crop insurance, but I like crop insurance. I was here in 83 and 88, and it was just brutal, right? And then we had the big drought across the Corn Belt in 2008, or 2012, I'm sorry. And most of you guys came out pretty good, right? Record income maybe in some cases. Pretty good insurance program. So you don't have risk of production. You really don't. You have risk of price. So if you guys don't sell something or don't find a way to stop downside, it will go down. This crop, next crop, I don't know. But more than ever before that I could think of in this industry, don't think it can't just ruin you on the upside. I've met a lot of people this week, and we're getting calls from people, that sold something a long time ago, and they want to know how to fix it. And you can't. I wish I could. I really do. I wish I could fix it. But if you sell something $3 ago in the bean market, I can't fix it. I can make it no worse anymore. I can make it never happen again, but I can't fix what you did. You sold it. So it's a market that is it's going to punish us different than it has in the past if you're wrong. And that's up and down. So stop listening to the gurus. The other thing you have to do, too, is you got to find a way it's got to be repeatable. However you guys want to market grain, and there's different ways to do it, you have got to find a way to repeat it, okay? So a couple of days ago, Drew and I were at breakfast, and I was waiting for him, and a couple of young guys were behind me in line waiting for a table with me, and this is funny, but one of the guys said he's really nailed this year so far. He goes, we just recently sold our bushels. Just nailed it. I go, that's great. I go, how'd you do that? He goes, well, my brother broke his leg, and I couldn't sell anything until he could help me haul. So that's his marketing plan every year. He's going to break his brother's leg in April. So I hope he alternates legs at least so he can heal up somehow. So I asked him, I said, what do you, seriously, what are you going to do in the future? He goes, I don't know, but boy, it worked out great this year. And it did. It really did. But he'll never get to repeat that unless he's got a really clumsy brother. So no matter how you guys do it, it can't be different. So I will tell you right now what you guys will do on your 22 crop. If you sold your bushels dollars ago, if you sold your corn bushels $1 or $2 lower than today's price, if you sold beans $1 or $2 or $3 lower, you're going to hang on to 22 long. You're not going to get rid of it right away in most cases. Okay? And I get it. But here's what can happen to you if you're not careful. You could end up selling the 22 and 23 or 21, 22, and 23 all at the same prices if you're not careful. So you're going to hang on for dear life because I got to get so much more out of 22 because I feel bad about 21, even though we're all making good money. I know that. I hope we are. But you're going to hang on longer because you didn't hang on the year before. And markets are funny. They have a way of kind of knowing your plan before you do, and they have a way of just doing the opposite. So if corn and beans break, we got a problem because we're not going to be sold enough. I've been told this 3 or 4 times this week, 5 or 6 times, I don't know. I've been told by people that the market can't go down because your expenses are really high. I'm not joking. I've been told that a lot. Who farmed here in the 80s and 90s and 2000? Anybody? Remember how much they cared about your expenses back then? When we had a Chicago Board of Trade pit, you guys remember that? So it's gone. Pit's gone. It's gone. There's not even pits anymore. There's just a floor over what used to be the pit. How many of you guys sent a postcard to those folks saying, I'm sorry you lost your job? Anybody? You don't care, right? It doesn't affect you. And the world's not going to care about your expenses. But here's what I remember happening in the 08 and 12 year that was kind of concerning for us now. When and if the market starts crashing, how long does it take for your expenses to catch up to that? It's a couple years, right? Your landlord's not going to drop your rate the second you guys, drop the market. It doesn't work that way. And, so if and when it does break, and nobody cares about your break even, no more than you guys care, when it breaks, it's going to be really difficult to, you can end up with $16 beans and make no more money than you did at 10. Because the margins are, the costs are unbelievable right now. It's almost as volatile as the market, right? There's things you guys are buying that are 4 times higher than a year ago. So you have to really be careful thinking that prices can't go down because your expense structure is not going to it won't let you do it. It's just not going to let you do it. So find a way to do something you can repeat. There's different ways to do that, but don't let the year before influence you. If you made a mistake the year before, it's because you did something that was not speculative, but you were guessing. So if you guys miss the market this year, it crashes by fall. It's not that the next year I got to sell earlier. It's just that you didn't have a plan. It has to go up. It can't go down. And that's, one of the problems with news is you guys grab on to whatever's bullish and you don't let go. And so no doubt South America, the drought was really bullish. It probably still is. This Ukraine thing so far is really bullish. But it's not going to last forever. There's going to be a day where the market's going to decide, that's old news. We've already kind of done some things. This country's going to do more exporting. We're going to ration here. Markets will adjust. They always do. But something that's bullish doesn't last forever. It eventually has to end, and then something else comes in its place. Lots of something else is probably. And those could be good or bad. I don't know yet. We'll see. So be careful trying to copy years. When I first started doing this, I think the corn limit was 10 cents, and I think the bean limit was 25, I think. Okay? And there was very, very few days we touched 10 or 25. It's just rare to see corn and beans go up a dime or down a dime, 25 on beans. I don't remember the wheat limit, but it was just rare. Now we move $1.87 in 24 hours. $1.87. So if you don't have anything going, if you don't have some type of a position, something sold, using the futures or options market, if you're just kind of winging it, do you really think you can keep up with this thing by just making a decision during all this? Once again, when this thing breaks, days. I'm not saying it's going to break tomorrow, but when it breaks, it'll be over in days. You won't believe how fast it'll change. So the speed of price, and then, I don't know how many days this has happened to our company, but markets trade at night. You guys know that. So 7 o'clock Central, they open up and they go to, the next morning, and they stop for a little bit and open up again. Many, many, many mornings, we wake up in the morning, get to work, and a whole bunch of stuff has happened. Stuff that's really good for our farmer clients, grain elevators too. But the market is so fast and trading so much at night that there's business being done and no one's awake. It's moving fast, and if you don't know what you want to do, you guys have been told for years you have to have a plan. You really do. And it's got to be a good plan. Just can't be a plan. So blind spots, there's a year ago, 2 years ago, let's go 2 years ago, I remember I spoke at this meeting in March of 20, and COVID was just kind of like coming around. It wasn't quite a thing yet. And I remember in my meeting somebody sneezed, and we kind of joked around like, wow, don't sit by that guy. Well, that's exactly what ends up being kind of reality, right? I think that's the guy that started it, by the way. So, but like a week or two later, COVID was like the world. It just took over, okay? And so all of a sudden, we're just shut down for 2 years. Nobody saw it coming, and nobody knew the impact to the business. Nobody understood ethanol plants can shut down, feedlots can shut down. There's just so much to it. And now it's over. I don't know why it's over. We all have theories, but it's over, okay? It can come back, right? It can come back, and now we can go right back through this whole crazy thing, and it became this really political thing, which I hate, but it became really political. So then, all of a sudden, you've got this thing in South America. Every year, you guys have chance of droughts anywhere, but this was a big one. No one talked about, no one saw it coming. In my career in North America, droughts that affected the market were 83, 88, 2012. Now, I know you guys have had some local stuff in your backyards, but those are the only 3 years we really had significant Corn Belt droughts that really made a difference. So what is that, 37 going on 38 years? 39 years? In 39 years, 3 different times the crop burnt up. How many times do you guys use weather not to make a decision? A lot, right? And here's how it works. It's never your backyard. I get guys from Ohio telling me how bad it is in Iowa, and that's why the market's got to go up. And then I get the guys in Iowa asking me, how bad is this crop in Ohio? I hear it's really bad. Neither guy's been to either state, but they just read something on the internet that said it's bad somewhere else. You got to really stop using the weather to justify not selling something or not marketing something. It doesn't work. 3 times in 39 years. And if and when you guys do burn it up with crop insurance and with the tools that I'm going to talk about here in a few minutes, it's okay. If you guys sell bushels, there are ways to stop the price from going up and just really hurting your operation. Okay? So if you sell bushels and use the tools and you burn it up, you'll be okay. You got crop insurance. But if you just sell bushels and don't use the tools, now you got a problem. Because now you're going to get a good crop insurance payment, and you have to make a decision. Is that going to pay for my crop I didn't raise? Or is it going to pay for the lousy sale I made? It can't do both. But if you make a sale and use the tools I'm going to talk about, and you have crop insurance, which I think 95% of you guys do, it's okay. We're good. But you can't sell. When it first came out, crop insurance back in whatever year it was, I remember going to meetings with crop insurance people who I didn't really know, and they were pushing you guys to sell. Sell your APH. You can't go wrong. And I don't know what year that would have been, but a year later, the market rallied a lot. And then I go to more meetings, and the crop insurance guys are like, whatever you do, don't sell. You got crop insurance. You got to put. It can't be both. You can't be one or the other. If you want to sell, sell. But there's tools to make sure you're okay on price and production. And if you don't want to sell, there's ways to manage price too, and I'll talk about that in a little bit. But you guys you have to understand, Whatever you think the news is today that's driving the market, it'll be different by harvest. I don't know what it'll be, but it'll be different. And it might be good news. I'm not saying it's going to be bad news. But, the black swans that they call it in our business, the black swans, they're breeding fast. Because, man, there's a bunch of black swans come out every 30 days now, right? So black swans are everywhere. So, all right, this one's a big one. And if anybody's involved in this stuff, bear with me. So it's harder now than ever before for a grain elevator facility to buy grain. It's just hard. Back in the old days, your grandpa's grandpa took grain to XYZ, whatever, and then his son took it, and you guys maybe, but it doesn't work that way anymore, especially if you have choices. And I get why it doesn't work that way. You guys have choices, and you want to, who dumps me quick, who takes care of me, who opened on a Sunday when I needed help, who's bidding the best. There's a lot of factors. And so that's fine. Well, because it's so hard to buy grain, the warehouse industry, especially the really big ones, the commercials, they came up with these ideas. They know you guys don't like marketing. Most of you guys don't like it, most of you. And so they came up with ways that give us the bushels, we'll take care of it for you. And there's a million different ways they do that. So in my world, we make people pay something to get something. If you want to stop prices from going down, it's going to cost you 20 cents. If you want to make sure you don't sell beans at 11 and watch it go to 17, it's going to cost you 35 cents, whatever. Well, you guys don't like that, even though you should. And thankfully, a lot of farmers do like it. So these guys got together and they figured out how to sell you a free strategy. When's the last time you got something in your life for free besides meals this week? And you probably paid for that, you just don't know it. You did pay for it. All right. So there's nothing free when it comes to marketing. It's impossible to have a free strategy that gives you flexibility and you can do whatever you want to do. So you guys may or may not be in this stuff. You may or may not, some areas don't have it. So these free strategies, one of the words I'll use is accumulator. You guys know that word? I bet you somebody in this room's got them going on. That was never built for you guys. There is nothing about an accumulator, in my opinion, this is my opinion, that's good for the farmer. But it sells. It used to. It won't sell now for years. But it used to sell. So the accumulator is essentially, there's different ways of doing these things, but essentially, in my world, if I want to use an option and it costs 25 cents, these guys are smarter than me, so they took that 25 cents and did things above and below the market to make it zero. It's called selling options, which I'm not a big fan of. You shouldn't be doing them. And I'll get more into that in a minute. So it's free until the market moves. So the result of all this stuff, and I will say this, I don't think anybody that offers these tools, I don't think anybody wakes up in the morning and says, boy, how can I really hurt my farmer customer? I don't think it's like that, but I don't think you were the priority. I think the priority was, how do I get, Paul's bushels locked in for the next 2-3 marketing years? Because I don't want him taking it over to XYZ down the road. I got to get them. You weren't the priority. And now there's another problem that some people aren't going to like me saying this, but the other problem is there are people running massive amounts of bushels, massive, millions and millions and millions of bushels through these pools that are 30 years old. And I was 30 years old once. But when I was 30 years old, I was surrounded by guys that were 40 and 50 years old. And they knew a lot of bad things because they remember when it happened to them back in the days. I wasn't around for it. I don't know if anybody else knows this story, but there's a Cook Industry story out there in the industry. Look it up someday. Cook Industries got in big trouble doing trading that happened to do with old crop, new crop spreads. And I remember the guys talking about that in my office. I remember a gentleman named Jim Farrell passed away. I remember him telling me all about it, and it's kind of like, wow, that's interesting. So I don't know who's helping these young guys, but it's like they got a loaded gun. They can't stop shooting. And you're going to have people this year in the industry that are managing bushels for people they're flirting with it, they may end up delivering a price per bushel lower than the low of the market for the contract, or right around it, right? How do you get under $4 corn when it's been trading close to $8? How do you get $11 beans when it's been trading close to, 17, whatever, right? But it's going on, and it's big, and it's not over. And then, just to make it twice as hard, there are people out there, inexperienced people out there. I'm old, I can say these things, I won't be around forever. So there are people out there that have no respect for the history of being wrong in spreads. Don't raise your hand, but who remembers the 95-96 fiasco? You guys remember that thing? Don't raise your hand, I said. 95-96, remember that deal? So that all started, I was telling Drew that this weekend. That all started by, I was sitting in St. Louis, Missouri in 1995, December of 95. I was in St. Louis, Missouri, and there was a panel for the Country Elevator Council meeting. And the Country Elevator Council attracts grain warehouse people. They still have it. And there was this panel discussion. They had a guy named Joe Dial, who was a CFTC commissioner. They had a woman who was a commercial broker for another company. And they had this kid there from northern Iowa. I'm not going to say his name. And he got up there, and he put up a chart of December corn futures like 10 years back. So it's been like 85 to 95. And he drew a line across 280 December futures. And he said, you guys know that if you sell anything close to 280, it never fails. It works. It's a great way to sell grain. We're like, okay, 10 years. And then he put up another chart that showed the spread from old crop to new crop. So December of 96 was the proper delivery month. But we started hedging things in Dece 95, even though we weren't going to raise it and deliver it till 96. You follow me? So he showed a spread that showed he showed a chart that showed the spread, and he said 9 years out of 10, we've rolled our customers from one year to the next. We're hedging in the wrong crop year, and we get them to the right crop year, and we've made money 9 years out of 10 on the spread. Not big money, nickel, dime, 15. And the 1 year it failed, we lost 4 cents or something like that. And all of a sudden, everybody in that room who is very smart basis spread guys just looked at each other like, oh, are we in trouble? This industry is in big trouble because that's an easy sell. Anybody can sell that to a farmer at that time. So a bunch of people, not just this guy, but a bunch of people started doing these things. They started selling 2 to 3 years of production in Dece 95. And then they got to get that to Dece 96, 97, 98. And again, the theory was, I've got 280 corn. I just don't see it very often. It'll probably be 220, 230 eventually, right? Back to my first slide, price predictors. Well, the market knows a lot. There's no secrets. Whether it's Pitt back in the day or electronic trading, the market knows a lot. So by the time, it was fine going from Dece to March, March to May, even May, July. In fact, we had a little carry in those months. But now we're in July, and there's millions and millions and millions of bushels in the wrong crop year. And everybody knows. And markets love blood. Man, they love blood. So, one elevator in Minnesota had 30 million, another one in Ohio had 25, 30, in northern Illinois. It was everywhere. And sometimes the elevator didn't know they had it. Sometimes they had a guy who just sold July corn, and he's thinking, great, they're going to bring me July corn. And you find out, well, no, I'm really selling next year's crop. By the time everybody had to jump from July to get to the crop year on 1 year, they got 3 to go, right? The spread was $1.50 inverted. So these guys that sold 280 futures, not cash, futures, 280 probably became 290 when they rolled it out from Dece to July. 290 now to go to $1.50 inverse, $1.40 they're going to get paid before basis. Anybody remember that? You can look it up. It's on. You can look up the stories about it. Lawsuits upon lawsuits upon lawsuits. Neighbors were mad at neighbors because you're taking down my co-op. One co-op in northern Iowa went out of business because 2 guys had it. And the elevator had nothing to do with it in that case, but a lot of elevators promoted it. For the same reason you guys are seeing cash contracts being promoted today. They wanted to lock in the origination. And we remember getting phone calls saying, hey, my neighbor's doing this. He's got 30 million bushels locked in. I better offer it, or I'm not going to buy grain for 3 years. And we're like, no. I mean, you're better off not buying grain and do something like that. So some farmers deliver grain at $1.40 less the basis. Some farmers did not. Lawsuits went every which way you can imagine. Contracts are better today than they probably were back then, I suppose. But it was just ugly. I'm not so sure we don't have some of the same stuff going on today. I know in some cases we do. So not only are these bushels sold at terrible prices because of these accumulators and selling so many options and selling this, but a lot of that stuff's still in the wrong crop year. And when you get home, go look at what July corn's trading and then December of next year, or this coming year, and then go look at July beans and look at Nov beans. It's inverted. And if enough bushels are doing that stuff, guess what the market's going to do? They're going to give it to them. They will. So if you don't understand all this stuff, and it's not easy to understand this, I'll make it really simple. Don't do it. Don't do it. My brother called me up years ago. He's a chemistry teacher, really smart, but he wouldn't know right now where his car's parked. And so he called me up one day watching this commercial for gold. This is years ago. Probably should have done it looking back. But he wanted to buy gold. He saw it on TV, and I'm like, stick your fingers in the drawer until you don't feel like doing it. That's kind of how this thing is too, you know. It's the same thing, you know. You just don't want to be, you can't do a contract you can't explain to your spouse. You just can't. So if somebody says to you, hey, honey, what's a double up? Don't know. And what's a knockout? I don't know. How did we end up pledging 40,000 bushels that became 80,000 bushels? I don't know. And here's the best part of it all. A lot of these programs won't let you put in all your bushels, which is great. I commend them for that piece of it. So if they only let you put in X percent, whatever it is, if it's so great, why aren't you doing all of it? If what they're offering is so fantastic, why are they saying you can't do all your bushels? Because they know the risk. And these programs tend to work in these kind of years. They do a little better than you guys because you guys don't sell right away. But every time, this happened before. We did this in 12, we did this in 8. 95, 96 had a different issue, but we messed up there. Nobody respects volatility. And about once every 10 years, something happens that just is extraordinary. So 95, 96 was at that time really extraordinary. 08 was really extraordinary. 12, wow. 20, 21 and counting, right? So the reason it's so important to be a good marketer, you know, is you got to get it when it's good. Because we might not see this again. When it's over, it's going to be over for a while, right? So you got to get it. So stay away. If you don't understand those contracts, stay away. And the beauty of marketing, this is what I've learned in 37, 38 years. The stuff that is the simplest, in my opinion, is the best. So why make it complicated? So that's it. All right. This is a line I love when people use this one. So I see this all the time on Twitter and different literature and articles and stuff. So anytime someone tells you you can't go broke selling at a profit, I'm going to decode that for you. I gave you really lousy advice and you sold the market way too cheap. That's what it really means in English. I know I told you to sell beans at $11, but boy, you were making good money at that level. Make a lot better at 17, right? So anybody, when you get told that, it's not true. And here's why it's not true. How many years in your business have we really scratched to make a living? I go back to 84. That's my beginning. So that's 37, 38 years. I don't know of those 37, 38 years how many years we were profitable, but it sure wasn't every one of them. And then take away the government payments and take away crop insurance payments, it's even worse. So what you have to do, in my opinion, is when it's good, you got to get it. And I'm not saying you got to get the high. No one's going to get the high. But you cannot miss a market by $3 or $4 or any dollar. You just can't miss it that much because there's going to be a day you sold beans at $12 and your broker told you, way to go. It's still a profit. You won't go broke. You will go broke in 3 years when beans are trading at 8 and your break even's $10.50. And ask them then how you're not going broke. You could use the extra money. This has been really true in the livestock sector. These guys, cattle guys especially, I don't know how you do it, but they lose money more years than they make, it seems like to me. But when they make it, they do pretty good. And that's how it works. So you can't let someone tell you, because they didn't do their job, that it's okay to sell low prices. It's not okay. It just doesn't make sense to me. This is not going to happen again. Once this is over, it's not going to happen right away, I don't think. Maybe it will. All right, USDA. You guys won't like this one, but so USDA has become a four-letter word in the grain business, but it's your fault. It's not USDA's fault. It's really your fault. And here's why it's your fault. Do I know if USDA is just great and they nail it and they're never wrong? I don't know that. I think they're well-intentioned, but they do work for the government. So I'm not, we're here to help you, right? So there's been this thing. It started probably, I think, in 8 and 12. You guys used to sell a certain amount of grain before harvest. Whatever it was, 30, 35% of the grain. And then 08 and 12 happened, and you stopped doing that. You stopped selling grain forward because you got burnt a couple times. So when those years after 8 and 12, 13, 14, 15, whatever, because you were no longer really forward pricing grain, you were walking yourselves into the August crop report, very long crops. You guys own the crop, right? You guys are the best at what you do in the world. There's nobody better. You guys are so good at it that when it's not even great weather, you still pull it off. Okay, so that's neat. It's fun to work with guys that are that talented. It is. But, let's see, 83, 88, 12. 3 droughts. So most of the time we raise a crop, right? So if we're raising crops and we're walking into August and not selling very much, and those guys report how good you guys are at what you do, what do you think the August report's going to show? Almost always it's going to show you guys are raising a good crop. And it goes down, and you blame USDA because you didn't do anything. And then it goes on in September and October, and I think we do November, we skip December and go to the final Jan. So let's not let USDA make a difference in our life. I don't care what they do. If they give us a bullish report, I'm on board. We can do things with that. And if it's bearish, it shouldn't hurt you if you do the stuff I'm going to talk about next. But just get USDA out of it. And again, I'm not saying they're good at it. I'm not saying they're great. They've made mistakes. There's no doubt they missed that wet year. No doubt. But it wouldn't have hurt you if you wouldn't have let it hurt you. So that's kind of the difference. All right, basis and spreads. I don't think most farmers really spend a lot of time on this. Some do. I know some do. Some are really good at it. But basis is really important. So here's how we approach it. If you have space on the farm and you're willing to use it, it's really good stuff. It's gold. People with on-farm storage are going to probably be better marketers than people without, but you can both do just fine. So if you've got space on farm, you kind of become a mini elevator. So your job, and you get to keep harvesting, right? You put bushels in the bin until you can't, and you get to keep harvesting. But if there's potential for more basis appreciation down the road, and or there's carries, which is not what's happening right now, but if it's a year where basis is cheap and the spread from Dees to July corn is trading at 30 cents a bushel, you should put bushels in your bin. That's an easy one. 3, 4, 5, 6 years ago, I remember beans were $1 higher for fall than they were for July. $1 difference. Say that again? Yeah. Which part? Right before that. Oh, you think I was listening? So December corn is trading at 27 cents carry, and basis is cheap. Sock it away. How many notes you guys taking? Holy cow. I want a copy. I want to see what I said. Dees July, right? But a couple years ago, 5, 6 years ago, we had $1 inverse November over July. So that means if you guys put beans in the bin, and I get you want to keep harvesting, you probably don't want money until Jan, I get all that. But when you have $1 inverse from Nov to July beans, that's the market begging you to bring them beans. And they're being nice about it. They're telling you to do that. And they're going to tell you another thing in July if you don't do it. Here's $9 beans. But they were 10 in the fall. I know. You lost $1 because you didn't believe my inverse. So that's how basis works for you guys. So in our world, one of the hardest things people have trouble with is when to make a sale, right? Tommy Grisafi always tells people at meetings, you guys are in the bushel business. Your job is to sell bushels. And it is, but the timing is really important. So you guys are in the bushel business. So when the basis is red hot, that's when you sell your grain. It doesn't mean the market's going to go up or down after that. It just means you got three components: basis, spreads, futures. Basis gets sold when basis is hot. If you're not sure when basis is hot, how many of you guys see free DP in your backyard? You ever see free DP? Delayed price? That's the grain industry telling you it's a secret signal. Sell me grain. Please sell me grain. That means basis is good. And when they get it, they're going to sell the basis. And they're not tricking you guys. They're not doing anything they shouldn't be doing. They're doing exactly what they should be doing. So they're offering you a chance to sell it. You say, no thanks. All right, well, bring me your bushels for free DP. You guys love it because you get to still own the grain, right? You still get to watch it go up if it does. But the second you bring free DP to an elevator, they are selling your basis for you. And they're going to buy futures back. And if the basis gets worse, they make money that you could be making. And if it gets, if the board goes up or down, they don't care. If the board goes down, the grain you sold is worth less. Their futures lose money. It's equal. If it goes up, futures is up to offset how much more they got to pay you guys. But don't ever put stuff on free DP. Sell it. And then the next page, I'll teach you what you do next, or 2 pages. All right? And then the spreads. If you see a dollar inverse, just do the math. Just do the math, okay? If you guys have, let's just go back to harvest. If Nova beans are trading at, $12, and July beans are $12.30, that's 30 cents carry, okay? Everyone's got different cost, but let's just say you got debt or something that's 4 or 5%. So 5% of $12 beans is what, 60 cents a bushel for 12 months, so a nickel a month. If you guys have interest cost of a nickel a month, and it's 9 months from fall to July, that means the basis and or the spreads has to be at least 45 cents higher. You got to make at least 45 to do it. So if the carry's 25, you better hope the basis jumps 20 or else you just did it for nothing. That's the math. You guys can do that part. Anybody can help you with that. And sometimes it's really good to keep the grain, and sometimes it's not. So we had a pretty good basis break here of late, but if you lost money hanging on to grain and lost basis, you did that after you had plenty of time to sell good basis, right? So you've got to learn, or have someone help you learn. We teach our guys basis, we teach our guys spreads, we teach our guys, how to handle the flat price. You have to know that stuff. You can't let one piece get away, because back in the 80s and 90s, 80s especially, if it wasn't for the basis and the spread management, that was the biggest part of the revenue, because we didn't have a lot of flat price volatility back then. You had to do that stuff. All right, options, futures, cash sales. Let's talk about all 3 of them. How's my time? I think I'm good. Oh, yeah. All right, I'm going to do cash sales first. Cash sales, this would be, in my opinion, the perfect marketing program. The perfect marketing program is you sign up, someone tells you the exact day to sell cash grain, and they're never wrong. That's what you guys want to buy, right? No futures, no margin calls, no accumulators, no garbage. And there are people that'll sell you that program, and they'll kill you doing it, but they'll sell it to you. So the perfect program, tell me when to sell grain. It can't be done. So cash grain sales is as simple as it gets. If you pick a level to sell cash grain, you're not going to get less than that number. If you sell cash corn for $6, fall delivery, you're going to get $6. And if it goes to 9, you're going to get 6. If it goes to 3, you're going to get 6. You're just going to get $6. It's the simplest thing in the world. And it works great when the market goes down, in your opinion, and it's a disaster when it goes up. Problem with trying to just sell cash grain by itself is I think you've got 18 months to market a crop. So starting sometime coming into harvest of 22, you guys should be at least, if not now already, but by then for sure, you ought to be thinking about 23. And you ought to be thinking about 23 until summer of 24, once you're really sure you got a crop growing for 24. You got to make sure you got a crop the year after, and the old crop does that. So you've got 18 months to market a crop. What do you think the odds are that you pick the right day to sell cash? Now, there's a thing going on with the market jumping here so much the last year and a half, and I don't think I can talk you out of it until you get hurt. So the thing is, people now think, well, this market is moving so much, I don't want to do futures, I don't want to buy an option, I'm just going to scale up sell. I'm just going to sell cash on the way up. Here's what will happen, I promise you. If you try and scale up sell, two outcomes. One outcome is you'll never get enough sold before it breaks. Probably the likely outcome. But it's a possibility. You might get one bullet done, you got 4 more to go, but you are not going to be able to get away with scale up selling. Or what you saw happen in the 21 crop, 21 was basically scale up selling, right? What happens when you're out of bullets? What happens when you sold your last bean at $14 and we're at 17? Scale up selling sounds like it should work. I know it does, but it never has, and I don't think it ever will. I really don't, but you guys are going to try it this year. I know you are. And then give me a call a year from now and ask me what else you can do, because it doesn't work. I wish it did. It'd be so simple, but it doesn't. So that's what happens in the cash market. Pretty simple, pretty clean. Futures. I'm not a big futures guy for you guys. I'm not saying never, but I don't like futures. If you're going to do futures, it should be through your country elevator, and they call them hedge to a rise or futures only, because I don't think most of you guys, 90% of you guys are not going to stay with the margin calls. If you sold beans at $12 a few months ago, and they're 17, and your broker's calling you every nickel, someone in your household's going to die. It's just what happens. It doesn't have staying power. So, but you can do a hedge to arrive at an elevator, no margin calls. They're going to charge you a fee for doing it. I'm not sure what the right fee is, but they should charge you a fee because they're financing it. When they bought beans at $12 and now they're 17, guess who's sending in that $5 every day? They should charge you something. So that's fine to do a hedge to arrive, but if you're going to sell too many bushels, really more than 10, 15%, then you got to learn the last piece, which is the options. I don't know how many of you folks have used options. Most people, I would say 90% of the industry, 90% of the people in this trade show this week don't use options. And of the 10% that do, 80% use them wrong. And there's a thing that happens, I don't understand this. I don't know whose fault it is yet, if it's yours or the broker's, but we're hedgers. We wake up in the morning and we think about your crop, what's your risk if it goes down, what's your risk if it goes up. Somewhere along the way, if you get into a trading account with somebody, you start doing stuff you shouldn't be doing. I don't know why that happens, but it does. And so all of a sudden, we'll get a call for a guy, hey, I want to work with you guys. My broker, he's not working out for me. And then you get the positions transferred over, and you're like, oh, I didn't know you raised hogs. Well, I don't. Well, you're short 20 contracts. Oh, we thought they were going to go down last week. Don't do that stuff, because you're not going to make money at it. I've never met anybody at a farmer meeting who specs on trades and makes money. I haven't. I'm sure somebody has. I've never met them. I've met a bunch that haven't. But just stop doing that stuff. You guys have enough risk as it is. If you guys want to play something, do it somewhere else away from your trading account. But don't be trading. You guys have so much risk. You don't need to play more. If you like that stuff, do it somewhere else or do it with different commodities. I don't know. But in your world, options are your friend. They are the greatest thing for you guys over the years. But you guys don't always like options because it makes you pay something up front. But options are honest. Cash sales and futures are not. So when you guys sell cash grain and you sell beans at $12 and they go to 18, was that free? They're not 18 yet, are they? 17? If you sell beans at $12 and they go to 17, what'd it cost you? $5 of opportunity at least, right? So, but you don't see that. You don't think about that because no one's making you pay it. But you buy an option for 25 cents and it goes to zero, and it's like, this is terrible. But you need, especially in this volatility, because you're not going to figure out cash sales, you need to sit down with someone and learn how to use options right. And I know a lot of you guys probably know how to use them, but not all of you. I know for sure some people do, because I know them. So you need to learn how to use options, because options do the one thing that nothing else will do. Options will give you what you want both ways. It'll make sure if prices go down, you're not going to get punished after whatever point you want to not get punished at. And anybody who sold grain in the last year and a half, if you would have bought a call, which protects this way, I'm not going to teach you options, it takes too long, but you only have two things that can go wrong in your business. You don't sell, it goes down. That's called buying puts. Fixed premium. You can never lose more than what you put into the put. Second thing is I sell grain. The only thing I care about is I sold it too cheap. I buy a call, fixed premium. Anybody who sold beans at 10, 11, 12, corn at 4 or 5, if you would have learned how to attach a call, you'd have not made a bad sale. It'd have been a great sale. And anytime you guys buy an option and it goes to zero, that means you did the right thing in the cash market. So if I sell beans in a week at $18 and I buy a call for 50 cents, I'll pick a big one. I buy a 50-cent call and beans go from 18 to 14. Call's going to go from 50 to 0 eventually. So if someone's mad he lost 50 cents, what did you not lose? What did you gain? You gained the fall from 18 down to, I think I used 14, I can't remember. You're taking notes. What's it say? Yeah, 14, thanks. So from 18 to 14, I just saved $4 of what would have been risk, right? And I lost 50 cents. That's how you market grain, guys. You don't need to listen to a speech where some guy tells you the highs are in. You don't need to listen to a newsletter. If you guys like information, go for it. I love information too. But don't confuse information with market predictions. I've never met anybody who gives farmer marketing advice who doesn't have a job. I wonder why they're still working, if they can trade so successfully. I don't know. So if you guys like information, you are never going to condense that information and make it work for you to make flat price marketing decisions. It's not repeatable. It just doesn't work. And even if you're right at the moment, something will change it down the road. Ukraine, South America, the government, who knows what. I mean, there's so many things that can rock your world, and some are really unfair. So that's it. So if you don't know how options work today, find out. Now, there's something going on now in options that's really different for us, and I'll just give you a heads up on it. Traditionally, if the flat price is here, if corn's $4, I can usually buy a put 20, 30 cents under, maybe 40 in extreme times. Well, because markets are so crazy, you have to be further away to make it affordable, in my opinion. So what a year ago was 30, 40 cents away to put a floor price on corn, it's probably 80 cents today. So you're going to say, well, I don't want to do that. Why would I want to be 80 cents below the market? Because they can drop 80 cents in 2 days, and they will, right? I don't want to spend 50 cents on a bean put that's $1 out of the money. They just moved $1.87 2 weeks ago. What looks out of the money could be 87 cents in the money in 24 hours. So I don't think that'll be forever how it is if you don't know options. You'll get closer again. But think of the other side. Okay? So pretend I'm going to sell beans to you at $14, and I want you to sell me a call. How much do you want? How much money do you need? Because everything above $14, you got to pay me. You're the other side now. You're not the farmer. You're a trader. How much below $14? How much do you need? If I gave you 2 cents a bushel, and you're going to give me every penny above 14, you doing it? Would you guys take 2 cents for all the risk above 14 as a trader? 3, 4, 50, 60? That's why they cost more. But if the markets are just doing this like a lot of years, they don't cost as much. But it's good they cost a lot right now, and the reason it's good is because you want this. We love volatility. I love swings. I love the funds. You guys don't. But I love the funds because it makes our job better to help you. So you guys, here's what happened. You're driving in your tractor and you hear beans were down 90 cents today on funds selling, and you curse the funds. But they can't be down 90 cents if they weren't up 90 cents by fund buying one time. So if you're winging it, yeah, you're going to get hurt. But you guys want the funds to make it go higher, and when it goes lower, we'll teach you this stuff. You don't have to worry about it. You have to learn this stuff to survive. Otherwise, you're going to continue to make sales too quick and or not quick enough. All right. The beauty of options, too, I told you guys futures and cash sales, whatever you do is static. If you guys sell beans at $12, it's $12. It never changes. The options can change, and that's the beauty of them. So anybody that wanted to lock in $4 for corn back in the day, there's a fee for that. But if you get a chance to move that price up, options let you do that. So let me ask you this question. If I gave you guys a $20 bill, this is how I tell how smart everybody is. If I gave you all a $20 bill, raise your hand quickly if you'll give me $5 back. One guy. You guys have been drinking all week. So $5. Think about it one more time. I'm going to give you $20. Can I get $5? Will you give me $5 back? How many times will you do that? Many times until I run out of money, right? That's options. That's what options do. So if you start at 4 and step by step you can get to 5 and say you pay 25 or 30 to get that dollar, isn't that great? Versus the guy who sold it at 4 and now he's done. Do it this way. Pretend you guys sold beans at $12 to the elevator and they called you up tomorrow and said, boy, I got a good deal for you. I'm going to let you take your $12 sale and move it up to 13, but you got to bring me a check for 30 cents. Are we in? Then they call you 2 days later and you can go 13 to 14. Are we in? Yeah, that's all options are. That's buying a put and moving it up. And then the flip side is you sell it and you can actually take money out of the market with calls. Now, everyone loves making money on calls and selling grain cheap, but it's penny for penny the same thing. If I make 75 cents on a call, but I sold my beans $1 lower, it's the same thing as selling my beans $1 higher and spending 30 cents to roll them up. It's the same thing. It's just money. You have a question?
I do. So you were talking about insurance earlier.
I was. I know very little about insurance.
Okay, so what if we do not get the crop? What are you suggesting that we do?
Do you have crop insurance?
Yes.
Okay. So the question was, if you didn't hear it, what happens if we're doing these things, I think you're saying, but you don't raise a crop? It's okay. So it's not okay, but it's okay financially. You sold your crop. You sold 150 bushels to the acre. We bought calls back, and you don't have a crop. It's okay. You're going to get a check from your crop insurance company to pay you back for the lousy crop. And if prices go crazy, instead of having to pay the elevator back the difference, that call will help make it up. Yeah, that's a great question. Yeah. Now, what could happen, though, is you could be the only person in America that has a drought. And so then in that case, you're still going to get a check from your insurance company, but the prices is probably going down. You don't need me to give you a call money. You made a good sale, you'll probably end up just buying it back and getting the difference back. But there's no risk with crop insurance. There really isn't. Up to your APH. So, all right, where are we at? We're almost done. This is so big, this one here, it's everything. In order to be good at marketing, with everything I've told you, this is the most important one. It's almost impossible to be successful if you lose control of old crop. I told you guys before, if you sold your 21 too cheap, you're just going to hang on for dear life on 22, and maybe that works, but probably doesn't. But if you got control of the old crop, and there's 2 ways to control old crop. One way is you got the bushels in a bin, and you got puts on in case it goes down. That's control. The second way, and the most typical way today for our guys, bushels have been sold, but they own calls against it. If you've got old crop covered, so you're happy no matter what the market does, up or down, if you got it covered, you will do the right thing for new crop. So today, if you're a customer and you come to me and, hey, you know, we're doing great. We've been making money on these calls, rolling them up. Let's get some puts on for next year. Let's get some stuff going. All right. Because you feel good about things. You just feel great about the market. You're enjoying the rally. You're not mad. But if you come to me and you sold your beans at 11 bucks for 21, and I'm going to tell you to do the same thing for new crop, I'm telling all of our customers, you're just less excited about it because you really messed up the old crop. Stay in control on the old crop. And it's easy. It's really easy. Either sell it and buy calls, own it and buy puts. That's it. But find a way to make sure you're always rooting for higher prices, and you can do that by doing those two things. But maintaining old crop is everything. Yes, sir. Hold on a second, so everybody can hear you.
Oh, you'll be able to hear me, I think.
Okay.
The question I have is, let's say we sell the $17 or $18 soybeans,
Okay.
and I'm still bullish.
Okay.
I think we're going to 20.
Sure.
And I buy a call. I buy a call, 2 strikes, 3 strikes out of the money, whatever value we want to buy it at. How do I know when to get out of that call?
Great question. So the question was, he sold his beans at 17, bought a call, he's bullish, and he wants to know how to get out. You don't have to know how to get out. You have to know how to take profits if the market gives it to you. So I'll just tell you what we would do in our world. Remember I told you before you guys would spend 25 or 30 to get a buck? Calls are the opposite. You're going to get the money. So if you buy a $17 call and we can move it up if the market goes up, let's say it goes from 17 to 17.20, and you can put 15 cents in your pocket. Okay, we just rolled it up and took 15. We're still long at 17.20. Let's try it again. Let's go to the 40. Oh, cool, 15 more cents. If we get up to 18, we just made 75 cents a bushel, which will get added back to your sale, and we just keep going. If you don't do it that way, it just becomes exactly like a cash sale. You got to pick the magic day, and you won't. You'll watch it go up and down and just be upset. You got to roll them up. It can be tough. We usually roll them up. We don't usually get out unless we usually roll them up. And what you don't know is you might roll it 0 times because the market never went up. You might roll that thing 20 times. You don't know. Just let it go as far as it'll go.
But the advisor that you're working with is going to say, Bill, you got a profit in that, you should take it.
Not a good advisor.
Really?
No. Really. A good advisor would not, because how would he know to get out? What tells him to get out? He doesn't know. Yeah, roll it up. Just keep rolling them up. You'll be much happier doing it that way. Because every time you try and get out magically, you'll regret it. So, you get it? Is that okay? It can, and you just got to either buy more time or be done, right? There's the right and wrong months to get into also. So, just depends. Every year's different. We would not be in a month that by the time you get to delivery, those things will expire. You wouldn't be in there. So like today, if you were going to sell beans you haven't sold for old crop, you're looking at July probably. If you want to buy puts for next year, it's November. Be in the right crop year. I know it sounds, here's what I tell people all the time. If I went to a meeting and I sat here and you guys taught me how to farm, I don't think I'm buying a farm tonight, okay? I wouldn't know what to do, but if he was kind enough to let me spend a year or 2 with him and just bug him all the time when I wanted to, I still couldn't farm, but I'd be better. So that's what this is. You've got to find a way to just ask. Yes, sir.
The wheat mills and stuff they're bidding off, the new crop is
You
bidding
lost
off
your
the
May,
D's.
July bid, yeah.
And so they're wanting you to do hedge to arrive off the July. That's a little scary because they're going to, in that kind of a tell that they're only wanting to give a certain dollar amount for wheat. And so
Yeah, don't do it.
say there's a $1.50 rise, between the July and the D's, their base is going to be horrible if
Yep.
you do a hedge to arrive. Is that correct?
Correct.
Thinking?
Yeah. So you got a couple of different choices. If you did do that and it was too late to stop you, we're just gonna buy a SEP call or something, but a better idea is just to buy a SEP put. Yeah, yeah. They're not, here's why they're not doing that though, just not to beat the elevator up. So there was a day in the last couple of weeks where wheat was up $1 in the May, or $1.50 in the May and July, and the cash market was up 30 cents, right? So you're an elevator and you're hedging futures, and it's like, I lost $1.50 and my cash in my bin's worth 40. They had to do something. They had to, so either they just crash their basis for the May-July period, or they push you out to the SEP. But no, don't do a July hedge to arrive. If you want to protect wheat from going down, there's a lot better ways to do it. I'm done. You know, all I was going to say at the very end here is work with people you trust, and that's everything in this business. And we've got questions. We've got a little time. I'll get you.
My question is if you're dealing with a broker on options and they seem to want to keep you on the short side, let's go to this next crop report and buy an option. And then you get through it, and you may or may not make anything, but one thing you did do is make a transaction with them. Yeah. And then, of course, then it's let's go into the May, and let's go in, you know, I don't know whether I'm going to make money or not, but I know who is making money on that.
Right. Well, I am a broker, as is Cat, as is Drew, and brokers, as a rule, are pretty lousy people. You know,
I am not.
There's not very good ones out there. There really isn't. I hate to say that, but there's there are good ones, though. It's not 100%, but there's some really lousy brokers out there. Some of it is greed, some of it is just inexperience. But there are, I don't know that it's hard to say yes or no on that thing without knowing exactly everything. There are times where the right thing to do is to go from a May to a July option. And there are times it's the worst thing to do. It just comes down to the expertise of the guy you're working with. So some of it's really simple. Like anybody in this room that wanted to buy an option for fall crops, and with the exception of a Texas guy or somewhere down there, but most people, fall crops, if you're not using December for corn or November for beans, or in the case of wheat, July or so, that's just nuts. You're in the wrong crop year. But as far as the old crop goes, if it was fall of, what year is this? Fall of 22, and we were going to buy calls because you sold your grain, maybe you're in the March, maybe you're in the May. Every year's different, but you just got to get a good broker. That's all there is to it.
The question I have now is just a reversal here. We talked about selling the $18 beans, and why don't I go out and sell a 1950 call that's worth 75 or 80 cents?
And you're going to, and so the question is, I think what he's asking me is, so options have two sides, okay? There's a buy side, which is what we make our living on. There's a sell side. And in order for me to buy a put for my customer, somebody has to sell me a put. And those guys are probably speculators. We need them for liquidity. So the short side, I think you used 1950, right? So if beans are $18 and someone sells a 1950 call, and let's say it's 30 cents, I have no idea. Two things happen, only two things. On expiration day of that contract, and only that day, either the bean market is below 1950 and you collect 30 cents, or it's above 1950 and you just sold your beans at 1950. So a couple of scenarios to think about. Beans were 18, he didn't sell them. He sold a call for 30 cents, now beans are 16. So he'll make 30 cents a bushel, but what happened to this cash market? I already sold them. Oh, you sold them and you sold a call? Yeah, you can't do it. That's called speculation. So you win twice if it goes down, and when it goes up, you just sold your beans again that you don't have. So you sold the call against the bushels you didn't do it on. So my answer was correct then. You're gonna have risk if it goes down more than 30 cents. Okay. Here's my thing on short options, and I'm not saying you never do them, but this is my 38 years of watching people short options. For every dime you'll make selling an option, in over a 10-year period, you'll give $1 back. I promise you. Keep track. So you'll make a dime for 8 years, 9 years out of 10. Maybe 20 cents, maybe 40 cents. But whatever you make, you'll give 10 times that number back eventually. Takes 1 year like this one, and you'll never do them again. That's the other problem, and you probably should. But short options they're not illegal, they're not terrible, but I have not found them to be really successful for people. And it's the reason that people get turned off of options. Go ahead.
So to protect a 23 or 24 crop with options, what kind of position could you take now?
Yeah. All you can do is puts. You can't do anything besides buy a put, and here's why. What's your break even next year for 23 corn and beans? I know. So all we have is one choice. Until you know what your break even is, I can't sell anything because I could be selling less in profit. I don't know. And again, today puts are further away from price than usual, but if you're not doing anything else, it's like the old loan rate days. I'd rather have a $5 loan rate if beans are 6 than none. I'd rather have a $13 floor if beans are 14 than nothing. And if the market moves, we'll move them up, and that'll change. It won't always be that far of a gap, in my opinion. But it's that far of a gap because the short side needs to get paid for tremendous risk. But, anybody who said at $10, well, I'm not going to buy a call a buck out of the money, they missed $7. The guy at 11 said, I'm not buying a call out of the money, he missed $6. The 12, you got to just jump in. So the one thing I didn't talk about, I want to mention too, if you don't have any space or not enough space for your crop, options are great because at harvest time, you should never pay commercial space. It won't pencil out. Sell it, whether it's fall, Jan, you guys figure out your taxes, and then come back and buy the calls. But don't pay 40 cents for 9 months of storage and watch the market drop $1 on top of it, plus the interest. I know I never thought we'd go an hour and a half. That's amazing, hour and 15. We got 15 minutes. I'm not trying to keep you here for 15 extra minutes, but if you have questions, I'll answer anything. And that goes for Drew and Kat. Anybody got any more questions?
Why does it take so long, like in the March, it goes straight on the 20th of February or whatever?
Yeah.
Why does it take so long for the board to clean up watching the board and
You mean like when they expire, when you see on your equity?
the March kept trading for another week or on the board. It kept trading for another week after it actually closed. Why does it take so long?
Well, they want the options to expire before delivery. So every option, and options trading every month, and they are usually expiring the 20th or 25th. So March options will expire March 25th, but March futures actually go until, early, whatever it is. Everything goes the same way every month like that. I don't know why they do it that way. Our deal's pretty easy. If you guys want to talk some more, get us your name and number, and we got really good people that do this in different parts of the country, 30. And if you guys want to talk to somebody, get me your name and number, or get Drew or get Kat your name and number, and we'll come out to your kitchen table and talk more about this stuff. If not, thank you so much for being here, and thank you, Commodity Classic, for having advanced trading. Bye.